morning. It is almost 8:30 in the morning. It's the 10th of December 2020, and I want to have a little bit of a discussion today, a little bit of analysis, but more so a discussion on some things that I'm looking at here in the market. Um, I'm being cautious right now. I'm actually considering closing out a lot of the positions that I'm in, just because there's a high degree of probability that we could be seeing a top in the making on the S&P. I know historically I have said that, yeah, I think this thing can grind up higher. This thing can grind up to 4,000 by the end of the year, and we're talking about the S&P 500. Um, but I'm being really cautious, and I want to build out a case to why I have a little bit of I don't want to say fear. I just increased caution with with everything. And so, of course, before I get into any of this, as you all know, this is not financial advice. I'm not your financial advisor. You are responsible for your own trades, managing your own risk, doing your own research. I'm just giving my opinion on the market. And if you don't have access to our Discord, throw a comment in the YouTube chat. I'll be more than happy to get an invite code out to you so you can join our community. It's constantly growing. We've got lots of new members, and I'm really happy to see that continue to grow. But for right now, let's go ahead and take a look at the chart here, because this is very interesting. All right, so this is the S&P. We're looking at the ES chart. So this is our S&P 500 E-mini futures. Um, so when we had the drop in when we had the drop back here in February and March, right? So obviously this started right here just a little bit after Valentine's Day. So we had this big drop, and this drop fell in 5 waves. Okay, so this drop fell in 5 waves. Let's go ahead and just kind of zoom into this and just take a look at it. We've got 1, 2, 3, 4, 1, 2, 3, 4, 5. Finished that move. This looked like a finishing move, and we were talking about this looking like a finishing move when it happened. All right, this looks finished, and this obviously finished the move, right? We've gone over this in the past, so I'm not going to rehash the whole thing, but we can see this as a 1, 2, 3, 4, 5. This finished the move. No matter how you cut it, that was 5 waves. But corrections don't happen in 5 waves. So this is why I am skeptical, okay? Because what I now see here is, I see signs of this being a 1, 2, 3, 4, 5 into wave A. All right, so let me just change the color on this so we don't get confused. 5 waves into wave A, okay? Then come down for the B, and you can call this an A, B, C if you'd like. I'm kind of in favor of this, but 5 waves up into an A. Then we go down for a B, and then we would expect there to be 5 more waves up, okay? So we could count this a number of different ways, but I prefer to count this as a 1, 2, 3, A, B, C here into the 4, and then we work on 5, which should get us into a C. Now, assuming that's what this is, okay? Now, there's a number of different ways that you can count this. There's a number of different ways you can look at this, but I am just concerned about this correction here. I'm concerned about this being 5 waves because, again, corrections don't happen in 5 waves. Corrections happen in 3 waves. So I'm looking at this as the potential for an expanded flat, which is still bullish, but it doesn't change the fact that when we do finish this move, we're going to probably have a pretty steep drop. Now, do I think it's going to look anything like this? No, I don't think it does. But what I can say is, this parabola that we were looking at, it looks like it's starting to lose momentum. If I turn on volume on this guy, you can see we do have a decreased amount of volume. We do have volume that's starting to decrease. I know that it's hard to see here. Let me go to a 4-hour chart here. Let's just take a look at this. We did have an increase in volume yesterday, but let's just look at that volume from yesterday for just a moment. All right, let me just kind of zoom in on this so we can take a look at it. Big spike in volume, but it was red volume. This was not good volume to have. Okay? This was not good volume to have. All right. And then we had a green candle with a significant amount of volume. But that candle got pushed halfway down. So let's just go ahead and drill into an hourly. Let's just analyze this whole thing. What happened here? All right. So the volume picked up right here. This is where it started. This was actually, half an hour before the open. So basically about 27 minutes from now yesterday. Volume started to pick up. Market open, it pushed down. Okay, so this is basically at the open, and then an hour in, it pushed down and it tried to get absorbed, pushed down, tried to get absorbed, pushed down, tried to get absorbed, pushed down, no absorption. Okay, now here we did see some buying, and this is where I bought, right? So I bought right down here based on our support. So this red box that I've got here, this is that support that we've been talking about. So we've been talking about this red box, and really this level here, kind of where we're at right now, being important support. Okay, and so we're kind of in there at the moment. Now, what do I see here? Well, unfortunately, what I see is a correction. From down here, I see an A, a B, and a C. This looks like a correction, which is not good. Not good. At least for today, this is not good. Now, we're starting to see some signs of weakness. That is the point that I'm trying to make. We're seeing signs of weakness. All right. And then the other thing that you guys are probably going to start seeing, and I'm not going to try and, kind of start anything, but you see this shoulder, you see a head, and then you see a shoulder in the making. And then where do we see our neckline? Well, we see our neckline starting from right here, moving our way out about this way. Okay. So if we break this guy, this is not good. This is not good. So I'm trying to be cautious right now, trying to be careful. Okay, let me get this out of here. So analyzing the volume, we see a big spike of volume, but no follow through. No follow through overnight in futures. No follow through. Okay. Now futures have it easy, right? You can see the very, very, very little volume that they've got here in futures. It would be very easy for them to push the price up, but that is not what happened. That's not what happened. Okay. So now, what's the point that I'm trying to make? Well, I'm being cautious is the point that I'm really trying to make. But what I also want to focus on is this move right here, 5 waves down, and then this looks like right here we have a correction. Right here we have a correction. So this could easily be a 1, 2, 3, 4, 5 pull down for the B. Then we've got 1, 2, 3, A, B, C here into the 4. I don't like that this wave 4 took so long. That's one thing that I am not in favor of here. But if this is the case, then we're looking for this to finish basically because I'm taking this trend-based fib extension, and let me just go ahead and draw this again so you can see two things that I've got here. I've got my fib pull from the top back here, right? So this is from the top back here on February 19th to the bottom down here on March 22nd, right? So that took a month for that to happen, and we've been working on this guy for several months. Okay. This 1.236 is sitting up here at 37.76, so it still can magnet its way up here. It's still possible. It still makes its way up here to 37.75. But I need to be cautious there. And another reason why, trend-based fib extension, starting from here at the bottom, going up here to the A, pull back to the B, and then we have our 618 right there at 37.32. So this red box is our support, but gosh, where I am really interested in getting into some serious short positions is going to be right there in that box. Because if this is the case, if this is what's going to happen, okay, that red box, I'm going to remove some fibs. So I want to recognize this lower is the 618 of our potential A, B, C correction. This 1.236 is an extension of the entire correction, or at least the crash that lasted for a month in February and March. All right, so pay attention to those two lines up there, those two boxes. So Depending on where this does end, what I'm going to do is I'm going to take my trend-based fib extension tool. I'm going to measure from the top to the bottom. My pullback is going to be from all the way up here, okay? So let's just say we do make our way up to the very, very, very top of this. I'm looking for a move down to maybe 28.65, maybe 24.16, okay? If this doesn't get that high, let's just say it stops, let's just say we did top out. I'm looking for a move down here to 28.20, maybe 23.78. I mean, gosh, that would be crazy to see something like that again. Now, is it going to happen in a month like it happened in February and March? No, probably not. Look at how long it took for us to recover and get up here. Okay. Now, if you're looking at this on like a monthly or or even a yearly, this looks like just a blip on the radar. This looks like absolutely nothing happened. But when you dive into this, people are calling this a V-shaped recovery. It did happen very fast, but when you dig into this, this doesn't really look like a V-shaped recovery. This looks like we are, um, we are slowly grinding at this point, especially now, right? This right here looks a lot like what happened right here. Okay, and we know what happened in September. So let's talk about that for a moment. All right, so bear with me. I do have something that I do want to point out. This is actually pretty important. So what I have here, let me see if I can just kind of zoom in on this guy, because I want to look at the chart and I want to look at this data. This data is very, very important. And this is the put call ratio. This is, this is publicly available information. There's nothing secretive about it. But, what we can see back here, this is basically right now, this is like yesterday, the day before, this week. And I've got it zoomed in right over here. You can see the put call ratio is sitting right below 0.7. So we're looking at, at data here that indicates that we are heavily, heavily bullish. Markets are heavily bullish right now. Okay, markets are heavily bullish right now, and it's starting to turn. All right, when was the last time that happened? It was right here. Markets were heavily bullish right at the beginning of September. And what happened right at the beginning of September? Right here, we had a correction. Okay, this was a big correction. I mean, this was tough. A lot of chop. Options just got decimated. Right, just huge theta kills on options right here. And you can see right here, we had the correction. The first move down went all the way to basically October. And what happened? This was the end of September. Getting into the beginning of October, the markets went up. Then what happened over here? Let's take a look down here. Then we started to see more bullish sentiment. And this went all the way through, it looks like about mid-October. So what happened in mid-October? So that's going to be about right here. We did drop, and then we started to move up. When markets started to get heavily bearish, or at least comparative to this move here, markets started getting heavily bearish, and this was a little into November. All right, and what happened down here at the very, very, very end of October? The markets turned. Okay, now keep in mind, this red line is a 10-day moving average, so the markets had to already start moving, and probably started moving in that way for about 10 days before it really started to pivot. And but that's what happened. Markets got heavily bearish, and you can see the spikes here on for the actual price action. So you can see we hit about 1.1 put call ratio. So we were, 1.1 in favor of puts, so in favor of bears. Okay, and that right there, when we started to hit that was right before November. You can see that, of course, the daily moving average is kind of a lagging indicator, but you can see the actual data. We spiked above 1, so we spiked above an equality in puts versus calls, and that was right down here. That was right down here when that started to happen. All right, so now I want to take a look at February. So let me see if I can get this for you guys and try and put this into perspective. I'm going to go to January 31st through March. Let's go through March 31st. So this is the data based on February and March. Okay, so right here, you could see this was about February 18th through the 20th. What did we have back here on February 18th through the 20th? This was where we topped. Put call ratio was at 0.8. Okay, 0.8 for a put to call ratio. Then we had the crash. All right, people were heavily, heavily bullish, and we had the crash that lasted all the way again through March 20th. All right, March 20th. And look what happens here. On March 9th, a huge spike. A huge spike. This was on March 9th. So let's see what happened on March 9th. So this was back here. You saw a big spike. Now, this is why I'm saying I'm being cautious. I'm not certain that this is what's going to happen, because a huge spike being really, really bearish. But these guys, I mean, getting it right here, that was a huge, huge play. Now, the moving average hit its peak about the 23rd, and that's when it started to pivot. Right around, actually, this probably be like the 21st, the 20th. 23rd right there, the 20th right there. Okay? You see that start to pivot, and that was the bottom. That was the bottom, okay? On the put to call ratio right there, we hit 1.3. This is a kind of a zoomed in thumbnail here, but you can see we crested there, and that is when we started getting bullish. So you could see that there was flow into calls and less into puts right there, okay? So let's just take a look and see what happened back here on June 8th. Okay, let's take a look at June. Let me see if I can flip this forward. June, all right, June 8th. Right here, we started getting really bullish. Okay, you can see the actual price action getting down here, really bullish. Then we saw a pivot right here. This would have been one day later. I don't know if that's the 8th or if it was a weekend. Let's just take a look. Here, the 8th, the 9th. Right there, we saw a pivot. So we had to wait one more day to the 10th, but we had that drop right there. We see that crest move up, and that's when we started getting bearish again. The market started getting bearish. Then we see another pivot right up here. This is right at the beginning of July. Right at the beginning of July. Let's find July. So right here. Right here we saw another crest. It started to pivot. Market started rallying. And again, this goes all the way through September. All right, so let me just get September in here again. Right here, you can see it. It started to pivot. It started to pivot a couple days into September, right? So this is September 2nd, September 3rd, and it fell. And it fell all the way to September 24th. And you can see the 24th right up here. All right, let me just add a few more days onto this. Let me go into October 30th just so we can see more data. Right here, right before the beginning of October, we can see we started to see another pivot right before October. Okay, this is pretty darn important information to look at. And so now, what am I saying? Basically, what I'm saying is taking a look at year to date here, you can see right here, this is when the markets started getting very, very bullish. This was in January, and then February, boom, okay? This is where we hit, and we started going down, okay? When we start going down, you can see the flow into puts increases significantly, all right? So we went from about a 0.75 to a 0.8 all the way up to 1.3, again in favor of puts in this case. This was major pivot high, major pivot low. All right, you can see we have a low and a higher low on call volume. Down here we have a low, we have a higher low on call volume. All right, so let's go. Let's take this all the way through today, December the 10th. All right. So now where are we at? So we've got this low, the higher low, and again we topped out here, and this was again in November. We talked about this. Now here we are again, right where we're at right now. We're starting to see a pivot. This is why I'm being cautious, because again the last time we had this all the way down here, we're deeper than we were in September as far as being bullish, right? Let me just kind of zoom back just a little bit. All right, just taking a look at that again, realizing that we're. Let me just kind of go back and get the actual measurement here. We're right below 0.7, right below 0.7. When was the last time we were right below 0.7? I mean, we're deeper than we were in January and February. So this is important. This is important. I mean, I'm just going to keep going back and see the last time we were below 0.7 on the 10-day moving average on the put to call ratio. And I'm not seeing any time in the past where we were. Even going back here to 2018, this was still, this was still there. So I guess we can try and see. Let's just see if we have data back to, let's see how far back we can go. Let's see if we can go back to 2007. Okay, so we obviously don't want to go to 2018. Let's go to 2008. May 19th, 2008. Let's update this. What I want to do is take a look at our crash to see if there's any indication that that this was going to happen. I'm going back to August of 2006. Okay, so this was 2007 going up, 2007 going up. I mean, you can see where here we had major pivots in all of these scenarios where we got up to 1.3. We had the bottom here, we had the bottom here, and then again we saw some caution. But even, gosh, even back here we didn't go below 0.8, and we are at 0.7 today. We are at 0.7 today, you guys. So let's just take a look. The last 3 months. Taking a look at this, we are below point. We are still very, 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 very extremely bullish, and gosh, the majority is never right. So if the majority of people are bullish, and we're starting to see a pivot here, this is a sign that there could be a larger correction in the making. So this is why I'm being cautious, and I am going to just advise everybody that's watching. I'm not saying cash out. I'm not saying get puts. I'm absolutely not saying get puts, right? But I am definitely saying to be extremely cautious and to protect your capital, because without that, you can't be here. All right. So I'm going to advise the members on the Discord some action that I'm going to be taking. And so yeah, I mean, I would love for, if you're not a member of our Discord, I'd love for you to be a member. Throw a comment in the YouTube chat. I'll take a look at that, and I'll send you an invite code so that you can join. You can be part of our community. All the usual stuff, like, subscribe, share. I'm not here to have 1,000 or 5,000 followers. That's not why I'm here. I'm here to educate whoever is willing to be educated, whoever is willing to learn. That's what I'm all about. I want to teach people to fish, and hopefully these videos help. Hopefully you're able to learn by watching my videos and listening to the words that I say and watching the tools that I use, because I mean, this is how I trade. And so hopefully you guys got something out of this. If you did, I do appreciate the likes and subscribe and sharing the video with your friends. I hope you share this one, because I felt that this was pretty important to mention. Taking a look at that put to call ratio, it's very, very interesting to me, and the fact that we're we're all the way down at this range that we haven't been at historically. And I'll take a look and I'll advise the Discord, but maybe even ever we haven't been this low. So that's making me very cautious. So all right, guys, I'm going to go ahead and end it, and I'm going to go and take a look at some charts and see if there's anything that's worth buying today. But I'm being very, very, very cautious.